Hey guys, Sean here. So a lot of things has happened over the week. The Fed is preparing for quantitative tightening. They are going to start selling off their balance sheet and interest rates are going to go higher. Traditionally, this is bearish for gold, but I still bought more a few days ago at 1918. What I got is a PEM Year of the Tiger 1 ounce bar, very beautiful design, and I paid more than usual above spot for this one, around 7% because it's not your typical bar. Now, I know many of you are wondering if it's a good time to jump in or wait it out. I've been buying gold for almost every single month for a long time, and I don't think I'll be stopping anytime soon. There's really a big shift globally in how the world sees money, and we are at the brink of a changing monetary world order. Right now, we are living through a currency war where the world is trying to figure out if the US dollar is still strong or if it's time for another reserve currency to step up. And regardless of who comes out on top, I believe the biggest winner will be gold. The US dollar is on a silent death spiral and we really need to take steps to protect our wealth. We have seen gold break past $2,000 and it's down to around 1930 today, and yes, it could technically go lower, and if it does, I'll be buying more. So here are my 5 big reasons why I'm still buying gold today. So strap yourselves in because I'm going in depth for this one. We already know that inflation is at 7.9%, but I won't be surprised if we hit to 8 or even 9% in the coming months, right? A lot of experts are predicting an 8.5% inflation rate for March. And to be honest, we all know that inflation in the real world is much higher than that. But what I am worried about is suddenly more and more people waking up to the fact that the dollar is dying. Now, one thing I realize is that many people, including myself, we don't really notice inflation until 3 things happen, right? It's either our utility bill goes up, our food suddenly becomes more expensive, and we are paying through the nose for gas. So if we take a look at some of the specific CPI numbers, we can see that gas is up by around 38%, electricity has gone up by 9%, and even food at home has jumped by 8.6%. Now this is the new reality we are living in, and I don't know about you, but the majority of my living cost centers around these 3. And if you look closely at the historical inflation rate, there has rarely been a time we were ever below 0, especially after gold was confiscated and revalued upwards in 1933, and then the gold standard being abolished in 1971. And from what I see, it looks like inflation is on an escalator up and up, and this is really freaking out a lot of people. Real interest rates are still highly negative, and mainstream media still isn't covering this well or talking about gold and silver as well. Now, let's talk a bit about the Fed shrinking their balance sheet. This is a big concern because it really has the potential to collapse the entire market. If you didn't know by now, the Fed is going to start shrinking their balance sheet by $95 billion a month. This sounds all fine and dandy, like the Fed is suddenly becoming fiscally responsible, but I think it might be a prelude to a big disaster. Now, the big issue is that the market kind of doesn't believe the Fed anymore. If you take a look at the first rate hike that jacked up interest rates by 25 basis points, the markets didn't tank and gold instead went up, if I recall correctly. And this is the big issue with the Fed, and it's really their dual mandate, right? They have to ensure price stability and maximum employment, and this insanity can be captured in this chart that just makes no sense to me, right? Their bullseye mission accomplished goal is for inflation to be maintained at 2% and unemployment to be near 4%. So right now, unemployment is at 3.8%, but inflation is near 8%, but you cannot fight inflation without affecting unemployment. It's really a bipolar mandate, right? It's going to be impossible to do both because when you combine a rate hike together with taking money out of the system, it is very likely the market will crash and unemployment just goes up, right? Borrowing will suddenly become more expensive as interest rates are now higher and there's less money around to be loaned. This means companies will either scale back or just outright crash and unemployment will go through the roof. And it will be 2008 or 2020 all over again if the Fed decides to print more money to reinflate the economy once again. So if we take a look at the Fed's balance sheet, they have ballooned their balance sheet from almost $4 trillion to around $9 trillion, right? That means if they want to reduce it to pre-2020 levels, they will need to suck out $95 billion every month for the next 50 months or so. That's over 4 years, right? And with the insanity that's going on today, anything can change in 4 weeks. Do you really think they can stay the course for that long without the market suddenly showing signs of crashing? I really think the whole world has been too addicted to cheap money, and many people are over leveraged in their lifestyles. And when money starts drying up and rates start shooting up, there'll be a lot of pain in the markets. And that is why I still trust gold. Right now, we are in the midst of a currency war, and I believe it will have far-reaching effects for decades to come. We know that US and Europe has sanctioned Russian banks and have frozen their assets, but things are getting worse. Russia is trying to force Europe to buy gas with rubles, and they are actually starting to succeed. Now, while countries like Germany and France are resisting, Hungary is accepting Putin's terms, and this really adds more credibility to the ruble being a commodity currency, where if you want to buy commodities from Russia, you can't pay in dollars or euros, you need the ruble, right? And all this with the rubles for gold peg is strengthening Russia's currency to the point that it's back to pre-war levels. Now this is showing the world that it is possible to de-dollarize and that the ruble might be an alternative currency to hold to really buy the commodities they want. I'm talking about oil, gas, wheat and metals, and all this is very important because traditionally you need the US petrodollar to really buy this stuff, but Russia is directly challenging the United States on this front. Now, America definitely isn't just sitting back and letting this one happen without a fight, and their latest move is a deadly one, right? They have blocked Russia's access to dollars for their bond payments, and they are trying to force them to default. Now, if you analyze this carefully, Russia is desperately trying not to default and have put out statements saying that they have no choice but to pay in rubles as they can't access their FX reserves in US banks. Now, this is really a messy situation because Russia knows that if they are actually forced into a default, it will be that much harder when it comes to convincing the world to de-dollarize, which I believe is their ultimate aim, right? Just think about it. Your reserves are confiscated, you can't trade in euros or dollars, your oil and gold are being sanctioned, there's truly very little left for Russia to lose. Now, it might look like the US dollar is winning for now, but over time, because of these sanctions, more cracks are appearing, and if Russia manages to dodge this default, they will likely just start pricing the rest of their commodities in rubles and just accelerate this de-dollarization. Now this means in the future, gold could become more expensive in dollars terms because it could open a possibility where buying gold using the rubles or maybe any other currency might be the better option. And this brings me to my fourth point. Every day that the war doesn't end is another day that things can escalate and get worse. Now, I don't want to sound like a doomsday prophet, but I truly think this conflict might last for a few more months, if not longer. It always seems like we are on the brink of peace talks concluding, but then suddenly shelling continues, Zelensky is making another TV appearance, and Putin is threatening new action. I really think Russia is determined to fight on and Ukraine is willing to defend till the last man. And if you observe carefully, the sanctions from the West are getting less and less effective. We might have reached a point of diminishing returns there. And the big issue is that negotiation will take weeks to be settled, and every day that we are at war, deficits and spending is piling up, not just on Russia's side, but on the West as well. US is spending around $13.6 billion to help Ukraine, and the EU is just about to send them more weapons as well. This simply just inflates the debt even further, and sooner or later it will have to be paid back. And another point I have to make is the growing food crisis that's happening as a consequence of the war. We are talking about almost a quarter of the world's wheat exports coming from Russia and Ukraine, and the war is just making things worse. Now, a lot of experts are warning of food riots that could break out, and we might be seeing the start of a string of protests around the world. Peru right now is protesting against higher food prices, and we are all feeling it in our supermarkets today. Right now, I think we'll see the sanctions really backfire once the war is over. Ever since Russia's FX reserves and assets were seized, every central bank in the world is asking themselves if their money is truly safe being held overseas. And we might see two things happen once the war is over. Firstly, countries with gold reserves will likely repatriate them back home. Right now, a lot of the world's gold is held either in America or England, and there could be a big wave of countries looking to bring their gold back home, just like how many countries have done in the past, right? We're talking about Poland, Germany, Venezuela, Austria, and the Netherlands. They have all done it, and I really won't be surprised if this continues. Secondly, I think central banks will start becoming the biggest gold stackers around again. Right now, while the Russian ruble is really trying to position itself as more of a commodity currency, I don't think central banks will want to stockpile much of it just yet. It still isn't a proven product, it can fluctuate wildly, and it will seem like betrayal to the US dollar, right? The US government won't be happy about it. However, gold will be the convenient excuse to diversify away from the dollar. After all, it is a neutral asset, it belongs to no country, and every central bank has been buying lots of gold over the past few decades. And that means they'll be selling dollars for gold down the road. And I mean buying a lot of the physical stuff, not paper contracts. And if there's one big lesson everyone has learned from the sanctions, is that if you don't hold it, you really don't own it. The sanctions right now might feel great and righteous, and make no mistake, right, they are causing a lot of pain to Russia, but it will boomerang back and hit the US in the head. And this time the boomerang might be made of gold. Now, while I bought gold, I didn't just dump tens of thousands of dollars at once. I'm not moving anything huge like kilo bars, but it's dollar cost averaging in every single month. Now, the price of gold is really getting volatile, and that's why I still believe in averaging every month to help smooth out the ride and build discipline. It really takes away the fear of hesitation when buying, because it becomes more like a habit, like going to the gym or depositing your paycheck into a savings account. But I think what makes me happy and afraid at the same time is that more people are waking up to gold, and it's showing in the numbers. So just recently, the US Mint announced that it sold over 420,000 ounces of gold between January and March, and that is the strongest gold bullion demand in 23 years. And this is all without any mainstream attention and just in US alone. I can tell you in Asia and locally in Singapore, gold demand has never been stronger. I have very mixed emotions about this because on one hand, I'm really happy that many people are understanding more about currencies and how gold can protect them. However, this just drives the price of gold higher as well, making it more expensive to buy. But if you're looking to buy a couple of ounces, you gotta make sure you handle your basics first, right? I'm talking about your day-to-day bills, food and mortgage, and whatever you do, don't buy anything on credit. Interest rates are about to go up, and the last thing you want to do is to swipe a credit card to get a gold coin. Remember guys, gold and silver is to preserve your purchasing power for the long haul, so you'll need holding powers for years, not months, right? So when you stack, you better strap yourselves in as well. It's gonna be a bumpy ride. Right now, I believe we're at the starting point of a titanic shift towards a new monetary order. A lot of people are speculating if it's gonna be a gold standard or back to fiat currencies. And the truth is, we won't know for sure. Not enough clues are being released and we can't solve the puzzle. But I do know two things. People are slowly learning about fiat currencies, especially how fragile the US dollar really is and how the world is just one wrong decision away from total chaos. Things are really at a fever pitch, and the situation between China and the US are heating up again, with Nancy Pelosi making a dangerous decision to visit Taiwan in a few days of all times, right? So we really need to get prepared. There's a common saying that it's always the darkest before the dawn, but it's also darkest before pitch black. And this is why I still trust in gold. So there you have it guys. Are you still stacking gold and silver during this period? Let me know in the comments below. And if you enjoyed today's video, be sure to smash the like button and subscribe for more gold and silver videos. Thank you all for watching, and I'll see you soon.